Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. My name is Henry. Today is Wednesday, June the 19th, 2019, and the time is 2:30 a.m. GMT. So today we will be looking at the update on the Dow Jones Futures. This is YMF 30 minutes chart here. We can see right here that we are looking for the upside overall, and then the right side remains higher with the green color. That means we do not like selling. Okay, and that means as far as we stay above this 25,898, we are looking for the upside in the index. We can see this is 1 and 2, and now we are looking for the wave 3 as an impulse, with this wave 1 of 3 currently in progress. So after finishing up this 5 waves up, that will end the wave 1 of 3, and then from there we can get a further continuation higher. Alright, so if we look at the larger time frame, okay, zooming out, here is the 4-hour chart. Now I've been explaining this in the previous videos that this is not really looking like a bearish market at all, because from the peak in April 24th we only got a 3 swings pullback. This is not a bearish market, it's only a 3 swings, and then on top of that we have a rally from that low in a 5 waves, right? It looks impulsive. So I've been saying that if you watch the previous video, that it is likely that we at least got another leg higher because of the 5 waves up from here, and it's very difficult to label it as a expanded flat from here, for example. That will be really forcing the thing, and so the more natural path obviously is going to be extension higher. Now we do get finally the extension higher here, and we broke above that peak from last week already, right? But I think the more important peak for us to break at this stage is this peak here in April 24, right? So if we do get a break above here, then we will open up more upside. So we got what looks like an impulse here, and then we got 3 swings, and then we will open up even more upside, and that will confirm that the indices indeed are going to resume higher. Now alternate scenario then is that you can see that since we broke above that last week's high, we are looking for continuation higher. You can see here that if you look at the 1-hour chart, this is with 1 and 2. So this is with 1 and 2 right here. Let me see if I can copy this. No, for some reasons, let me see. Alright, here we go. So this is your wave 1, and then this is your 2, as the 1-hour chart suggests. So that means, again, Elliott wave principle, wave 3 can be the longest wave. But even if this is some sort of ABC, potentially if it goes to a full 100% extension, it can go to 27,578, right? That is when the leg is equal, and if it is doing that, it will break this high as well, right? So I think in terms of probability, right, in terms of probability, we are looking for the upside towards this target here, and eventually it's going to break this, right? We got a higher high, so cannot be bearish at this moment. Now having said that, what will be the alternate? Well, the alternate is going to be some sort of ABC. So instead of 1 2 3 4 5 here, this could be an ABC with a very short C, right? So if you look at the 1-hour chart, as long as you can count a 5 ways up from this low here, 1 2 and then maybe 3 4 5. So technically in the alternate scenario, this 5 ways up here, it could be a wave C, right? So instead of 1 2 3 4 5, that could retest the high, become an ABC with a short C, and then starts to pull back again. But again, unless you have extremely bearish bias, which doesn't, I mean, which it has no, you have no reason to be having something like that, all right? Because indices has been in a 10-year bull market, and you don't want to pick the top here, guys. Trust me. So that means you have to go with the more natural path, which is expecting higher. So of course there's always going to be alternate, and I'm presenting you alternate here in the case the indices fail to make a new to fail to extend higher. And what we can do is, again, we can have an ABC with a short C and then starts with a lower. Now otherwise, guys, what we like as the primary view is an extension to the upside. I think there is no need to provide justification of the reason. We have a 10-year bullish market, 3 swings pullback, an impulsive move, so therefore we expect further upside and extension. Indices, if it can break above this peak in April, that is even better. That will suggest that we are indeed going to extend higher in the indices. All right, so tomorrow we will have a FOMC meeting, so potentially can be market moving, right? So the market has been expecting for a while, under the pressure from President Trump as well, that the Fed should be cutting the rates, right? I think ECB Mario Draghi has been saying that earlier today. And so if if the Fed is going to cut the rate and things like that, it's going to provide stimulus to the economy. Might be supportive on the indices, right? So again, not necessarily relying on the fundamentals here, but just saying that we got a risk event tomorrow, because the technical is sufficient for us to conclude it's going to extend higher without any fundamental speculation. All right, but there will be a risk event tomorrow with the FOMC, and then next week is going to be another risk event, key risk event in the G20 meeting, right? There will be a meeting between President Trump, President Xi, latest news. So they're gonna be trying to resolve the differences and redo all this, undo all the trade wars. So we'll see what happens. And in the meantime, guys, I hope that you enjoyed this video, and as always, if you like it, like and subscribe the video, as well as you can check our service. We have 14 days free trial, and the link is provided in the description of the video in the YouTube there. Okay, so see you guys again tomorrow. Have a nice day, everyone.